Hey all, welcome to the next episode of Loan Syndication Reconciliation. Today we'll discuss on the drawdown. It is a second most important term in loan syndication. So what is drawdown, how it works in reconciliation, how we can resolve the break on the daily basis in reconciliations. So we'll discuss with the start with the meaning definitions and then we'll move to the further part. So, drawdown refer to the process of assessing and disbursing fund from the approved loan facility. Instead of receiving the entire loan amount upfront, borrower can withdraw fund in tranches as needed, typically based on the milestone or the project requirement. So, in simple and short, we can say that drawdown is a approved amount from the lender and borrower withdraw on the particular date or particular time period or year or maybe month. So it is pre-approved, so borrower can withdraw on the approved fund. So how it get approved and how thing will get work, we'll discuss in the example. We have a two table below and we'll discuss on this part. For example, we take an example of 50 lakh loan amount. Okay, so lender and borrower agree to on the 50 lakh amount of loan, total loan amount. So the total loan amount will be not disbursed at one go. It disbursed into the three part as per the example, but in some cases it will be disbursed into four cases or five, maybe many more. It depends on the agreement. So we have taken the example of only three. So first loan amount will be disbursed of 15 lakh on 1st January 2023 and the disbursement date 15 million and 15 lakh and the 1st January. The second will be disbursed on 20. So total loan amount will be disbursed 35, 15 plus 20, 35 on the 1st January 2025, and again the third will be done on the 1st January 2024, 15 lakh again, total 50. So why this is disbursed into the tranches, or we can say into different part? Because at one go, if some business will take or borrower will take loan, so he has to pay the interest on the full amount like 50 lakh. So as per the requirement, the borrower have some construction business, for example. Okay, so he did not want amount on the one go, as the construction will take 1 year, 2 year according to the project. For example, it will take 1 year according to project. So one go they will not need a 50 lakh one go, they need into some steps. So that's why if borrower take a loan of 50 million 50 lakh and withdraw at one time, so is to pay the interest. So how this interest will get benefited and how it will important, so we have shown into second table. So the amount is 15 lakh, 0.8 is the interest rate, 48 months, so approximately 36,000 he has to pay. And then the second will be the 35 20 again he has taken, and the total 35 0.9 48 month is 84, and again the 50 rest 15 lakh he withdraw, and 0.8 interest rate is 1 lakh 16,000. So if borrower will take a loan of 50 lakh at one go, so he has to pay the interest of 1 lakh 16,000, but he withdraw into some part, so he has to pay the less interest accordingly. So he can invest into his business according to the how the business will run, or if he in the construction business, according to construction he will withdraw the money. Okay, so again we'll come to the short definition. Drawdown refer to the process by which borrower accesses the fund from committed loan facility. It typically involves requesting and receiving position of a loan in tranches over the time rather than single lump sum. So here also 50 lakh is not withdraw at one go, it will release into the some steps. So purpose of this is project is user in the project finance corporate loan or revolving credit facility to align the borrower's schedule with the project company cash flow requirement. So the purpose of this will be in the different project as well. So if the borrower are working on the finance project or maybe the corporate loan or revolving credit, so accordingly he will mention into the his agreement and he will withdraw the fund. So benefit of this drawdown, so it will give the flexibility. So flexibility important to the borrower, because borrower when he required the money according to his project, like he invest into the private equity or maybe in a hedge fund, or he have the real estate business, or he's in construction. So according when he required the money, he can withdraw, and the if he did not withdraw the money, so lender will charge the penalize him also as well on the unused amount. So that also the term will come when we do the reconciliation. So on unused amount also borrower has to pay the fees or maybe the penalties to the lender. It is also important in the part of efficient cash flow as well. So if borrower withdraw at a full lump sum amount at one go, so he may be his plan may be get distracted, or maybe he invest on the some unnecessary project or maybe unnecessary investment. So if borrower will work according to the plan what he want to invest, so this also play important. If he get amount on the some particular time period, so he can invest that amount into one particular or the one project only. So accordingly he can avoiding the unnecessary liquidity problem or operation need as well as the project timeliness. So it is also saving the interest as well. So we show it in the example as well. If he withdraw 50 lakh at one go, so he has to pay the EMI, or we can say the interest at 1 lakh 16,000 something. But he withdraw in some parts, so he has to pay the less interest. Like for 1 year or 6 month, the borrower only required 15 lakh. So why he can take a loan of why he can withdraw the 50 lakh? He only withdraw the 15 lakh only, and he only pay the interest of 36,000 only. So it is interest saving as well. So it is the fourth point is better utilization. So as we discussed in the second point, efficient cash flow, the same here, the better utilization means what borrower has taken loan, like what purpose he has to taken loan. So this drawdown will help to focus on that part only, and he can use that drawdown amount on the particular project only, so to achieve his business goal as well. So type of drawdown, so we'll discuss now on the type of drawdown. So there are some types of drawdown. Usually when in previous episode we discuss about the pricing letter and the notices. The same when you do for the drawdown, in drawdown also the pricing letter mention about the types of drawdown. So the first type is revolving credit facility drawdown. So in this, where borrower can repeatedly draw and repay the fund to credit limit. So it is type of a credit card. For example, if loan amount is 10 lakh and borrower withdraw 2 lakhs, 1 lakh, again 2 lakhs, 1 lakh, and he is repaying same at a given particular time as per the contract. So again his limit will come to the 10 lakh after paying that what amount he is withdrawing, like 2 lakh he withdraw, and month end he repay the 2 lakh. So again his limit will come to the 10 lakh. So it is type of a credit card, or we can say the line of credit or credit facility. So this term will come. The term loan drawdown is something like it's a long term we can say maturity, or we can say the loan agreement, where the project size is very large, or we can have a construction business, or he has some infrastructure project like airport building or something, and the project run will 15 years to 20 years. So the drawdown amount, it is a long term amount. So at one go, for example, he required 1 crore, for example, to this. So he can withdraw this amount per year, like 10 lakh, 15 lakh, 5 lakh or something. So it's a long run drawdown part. So sometimes it is project finance also. So according to the project, like project maybe the different, like is it construction or operational. So according that type of drawdown also is available into the loan syndication types. So we can amend as per that. So the fourth part is the capital call drawdown. In private equity usually it is used. So I mention here, in private equity it will mention where the limited partner provide fund when called upon by the general partner. So it is a one term when general partner requires some money. So in private equity, limited partner will fill that gap and work on the what required the business on this part. So there is some drawdown process as well. We have noted down. We'll moving to the next part is drawdown process. So drawdown process involve the 4 step. First is loan agreement, where the borrower and lender agree on drawdown terms in the facility agreement. So there is some terms and conditions of drawdown as well. So the basic thing is the total amount of a loan, like 50 lakh for example we are taken above, and what is the interest rate, the drawdown date as well. So like in if 5-year loan is there, so what time after 1.5 year the drawdown will be there. So accordingly it should be decided, pre-decided the maturity date as per the details of all the project as well, what project borrower want to invest. So accordingly it get mentioned into the loan agreement. So drawdown notice as well. So as we discussed, the drawdown notice mention the formal request for the loan requirement and specifying date and purpose. So what borrower has to do, that the borrower has to send a formal request or pricing letter or something, one request letter to the borrower, lender, to mention on the date and purpose of withdrawing this. So accordingly the lender will release the fund and the borrower can utilize for his project. So approval and disbursement, lender evaluate the compliance and disburse the fund accordingly. What borrower has sent the letter to the lender, so lender will evaluate according to his terms and condition what loan agreement has been done between borrower and lender, check with the compliance legal and legal team, and accordingly it will disburse. So monitoring as well is a part of drawdown. So drawdown and monitor against the loan convenient and the limits. So whatever the limit has been decided, accordingly it will disburse. So as per LSTA and LMA market, how it is processed, how drawdown has been processed, and what market will include, what document will be include, and how the facility will get implement, and all this thing. So this table will resolve your all the queries and will help you to resolve day to day your reconciliation break as well. So first start with the region. So region is again LSTA market, you work for the US market, and LMA market work for the European, Middle East, African, or we can say EMEA market as well. So loan documentation, the second point is the loan documentation. So loan documentation required standard for US specific legal framework. So it is a one type of framework as per the New York law. So accordingly the drawdown should be registered. For the LMA market, is tailored by the English law and local EMEA legal system. Accordingly the loan agreement or document has been prepared. The third point is the according to the market scope as well. its focus is as per the distressed loan trading in the secondary market. So for this particularly LST market is focus on distressed loan trading in the secondary market. However, in LMA it's focus on the primary loan syndication and the secondary market trades. Borrower industry heavily used for the leveraged loan for private equity and corporate finance. So here the difference has come. So as per LST market how they will utilize, and as per LMA market how they utilize. So facility type, for example, the common type used for LST is term loan, revolver, asset based loans and the syndicate deal. However, for the LMA market frequently used for the structure finance and project financing. So LST market usually used for the some facility like syndicate loan, but LMA market usually for the structure finance, project finance, like for the infrastructure or maybe some private equity hedge fund, or maybe in the real estate business as well. So fee and the pricing model, the 6th point is, so as per LSTA it includes the detailed breakdown of a commitment fee and utilization fee. However, for LMA market is depend totally on the negotiation and the framework for the margin on the drawdown terms. 7th point, the goal of standardization. So ensure the high liquidity and efficient secondary trading with a clear guideline for this. And for the LMA market it aims to documentations and discriminatory in the multi-judicial deal. So it is some terms that they have to follow while doing the agreement. So we just example is there for the US company secure 500 million syndicate loan for acquisition of LSTA standard, but in European this is 300 million something renewable energy under LSTA market. So there is some standards are there according to the drawdown has been and the loan agreement has been decided. So moving to the example, so when you do the reconciliation or do the practical resolution of your break, when you get a discrepancy between the custodian with your application, whatever accounting application you are using, as per the broker as well, or maybe the custodian and your application. So how you can resolve? So you can validate this thing from the S&P market. So you will get a pricing letter, or maybe you get a contract note when you checking your email from the broker, you get a contract note, so you can validate accordingly. So basic thing is mentioned on this is the whatever the drawdown amount and what are the rate they have used, and utilization fees, commitment fees, the schedule of this drawdown, the initial drawdown date and today's drawdown date, all should be mentioned. So we have prepared one example as well. So if we see this example, we can get to know how it is work. Okay, so here we take an example of a ABC Renewable Energy is a borrower who required money, drawdown for syndicate for project funding. Okay, he required some project funding for his company. So the loan facility is 100 million term loan facility under the LMA market. So here all the thing is given. So it is a term loan facility. Okay, in types we are discussing about the many types. So it is a term loan facility. So under the LMA means European market. So accordingly the key details has been given, like drawdown amount. So out of 100 million whatever they agree between borrower and lender, so it is 100 million, but they want, as per their agreement, they want 20 million now. So whatever the rate, like SOFR rate plus whatever the rate they have decided, plus the fees was 0.5% is a commitment fee, utilization fees and uses of the 50%, and the schedule, what is the schedule. Accordingly, the notice as well, the notice is date from 9 October to the agent is XYZ bank for example, but many banks pay the agent like BNY City, IBKR, and many more banks play the agent role as well. So here from the ABC company, so he draft one letter to the lender about this, he required money, and he mentioned about all the things like how much money he required, whatever the bank account numbers and the transfer, all the details, and this is how it is work. Okay, so again we have draft one example regarding the drawdown as well. So here the borrower is, it is second example we are taken, and it is an example of real estate. Okay, real estate developer financing commercial project. Okay, so DEF is a borrower, he run the real estate business, so his facility is 50 million revolving credit, drawdown is 10 million. So the agreement between borrower and lender and all the agents working is 50 million, whatever the loan agreement is there, but as per that agreement, drawdown amount he required is 10 million. Okay, so he mentioned the purpose as well. The purpose is land acquisition, means he want to build some commercial complex and land acquisition he required. So he mentioned into the that letter as well for what purpose he required. Accordingly, he mentioned the date as well, whatever the rate is there like SOFR rate plus whatever the LSTA rate is working. Then the drawdown notice he draft according to detail, he draft a letter as well like date is this, the agent bank is agent XYZ bank, from the DEF real estate who want the money, subject he also mentioned like drawdown request under revolving credit facility. So he requests to the agent bank, so and mention the amount, purpose, and interest rate, and mention also one note also as per the agreement, we can withdraw the money and all the things. So according to the he mentioned, so this the both market, this is example, the second example, if you see the line number 36 is it is example of LMA market. The same the same draft he prepared and he can use. So the basic thing is LMA and LSTA market is according to the rate. Okay, what rate they are using. So sometime in LMA market follow the European. So European using the Euribor rate first. So now it is replaced with the SOFR, and for LSTA market they are using before LIBOR. Okay, so now it is replaced with SOFR. So it is depend on the market what rate they are using, and one common rate they decide when they do the agreement. So that all for the drawdown that today we have explained. Any question you have, you can drop a comment on our this video, and if you want to have any doubt on any particular part, so you can mention there, we'll definitely comment on this how we can resolve or we can carry this thing in the next video. So thank you so much for watching, hope you like this video. Please do not forget to subscribe this, so because we are releasing more video on this part, loan syndication coming time, as well as we running with the other part as well, corporate action, loan processing, and as well as loan syndications, as well as in trade processing as well. So you can get a better update on the things. So thank you so much for watching.